Hello, everyone. Welcome to my channel. My name is Patrick. Okay, I'd like to show you today, before we invest into banking stock, we need to know the relationship between the Malaysia 10 years bond and the share price. Okay, let's take a look of the share price of Public Bank. You see the price at around 5 is in 2018. I show you this graph. This is the Malaysia 10 years bond yield. Okay, the bond yield is more normally foreign fund, they will buy this Malaysia 10 years bond as government will pay the fixed coupon and they will get their capital back after 10 years. So this can be traded in the secondary market. So for this secondary market price, we know the bond yield highest is at here around 4 point something. Okay, 2018, the peak is here 2016. So when you check the share price, it's also the same. Okay, so the highest is around here, and when the bond yield coming down, because Bank Negara cut interest rate and it dropped to 2.6% here, the share price of Public Bank also lowers. Okay, then it bounced back when the 10-year yields also up, follow the share price also follow the trend. So when you buy here, you have already gained around 27-30%. Okay, for Maybank share also the same. The peak is around 2018, 10 ringgit 70 cent. This is where the bond yield was higher back then. So when you take a look, what actually moved this 10 years bond yield, Bank Negara decision is one of the reason, and also market expectation. Let's take a look of this Bank Negara decision on the overnight deposit rate. In 2018, that time, January, Bank Negara hike rate, okay, from 3% to 3.25%. Basically, where our economy is doing very well. So in order to cooling down the very hot property market, Bank Negara decided to hike a bit of rate. And then when it maintained until 2019, cut 0.25. And when this pandemic, the COVID-19 hit us, where a country went into lockdown, you can see Bank Negara start easing their policy. They cut 1, 2, 3, 4 times from 0.25, then one cut, then second cut, third, and the last one cut. Then after that, they maintain at 1.75 for the overnight deposit rate. So this one actually signal to the market that our Bank Negara will continue to have an easing policy. That's why the bond yield expectation also dropped. But why it rise back up even before the Bank Negara start to high rate? One of the reason I think is because of the inflation pressure is quite high. As you can see here, the inflation now is around 2.9% for October. For November, the data will be out on 24th of December. So this range, right, 2.9%, it is higher than 2019 already. Okay. Also, it seems like it will go higher around this range, 2017, in year 2017. So this actually gives pressure to the Bank Negara to whether they want to continue to ease their policy, because they also face a dilemma, which is the Malaysia unemployment rate is a bit slushy, I say. Currently it's 4.5%, haven't really reached the pre-pandemic level, which is below 3.5%. I think this is one of the reasons that our central bank will continue to have easing policy, because they want to support the economic growth and also to have lower cost of borrowing for the company, to encourage them to hire more people from the market. So our unemployment rate as compared to US, right? Actually, our unemployment rate is slower. I mean, to get back to pre-pandemic level, maybe due to our country face a couple of lockdowns, like in July, another lockdown. So it will, actually when you lock down, it spike out again. That time, then when the country remain, open, business open, it will drop. So for US, right, they only have lockdown once, so that you can see it's a very sharp drop. And currently, I think by next month or two, their unemployment rate can reach 3+%, which is their pre-pandemic level. But their inflation is higher than us. You see, their inflation is 6.8%, highest in like 30 over years. So for us, we are fortunate because for inflation pressure not so high as compared to theirs, because many things is in control, like the sugar price, some of the food price are subsidized, and also electricity. We also get some relief from the government to get some discount from them. And the petrol also control from 95, also 2.1, regardless how high the crude oil go. So this is some good things that our government is doing to control the inflation. So that's why they say that in their statement, they say next year going forward, 2022, for the inflation remain moderate. Yeah, moving into 2022, headline inflation is projected to remain moderate. So I think with what they say, they will continue to have low interest rate. So for bank share, right, in order for them to go higher and higher, the first thing need to achieve is the unemployment rate need to continue to fall, and the economic of our country, GDP, will continue to grow faster, and they were hiring more people. That's when the time that Bank Negara will start tightening. When start tightening, the 10-year, I believe this 10 years bond will go higher, and it will also help to support the share price for the banking. So this all depend on the economy of our country and also the policy of the central bank. So this is my sharing about what actually moved the banking share. And for the next few video, I will share with you to study the fundamental of this banking share, like Maybank, Public Bank, CIMB, RHB Bank, these 4 big banks. Okay, so remember to subscribe my channel. If you like my video, please help me to share and like. Thank you so much.